All right, everybody, welcome to this month's Investing in Identity Forum. This is your host and guide, Travis Dre, the founder CEO of Liminal, joined by none other than Dave Fields, partner at PTB Ventures. What's up, Dave?
What's up, Travis? Just getting ready for the fourth quarter. How about yourself? Summer's over. Everybody's getting back to work, right?
Yeah. Here in New York, it feels like there was never any slowdown for people in work. Streets are busy, and obviously the markets have been pretty wild. Public markets, private markets, everything has been up and down, but lots of activity still happening on our ends. It's been pretty exciting.
Yeah, absolutely. And I know we have some good data that we're going to discuss a little later. So maybe let's turn to it.
Yeah, digging right into it. So, for this month, looking at September, historically speaking, September's a month where we're starting to really see a lot of the kind of the strategy or the strategic decisions that were made at kind of that mid-year, executive offsite, typically that we hear in June and July. September is really where you're starting to see those types of executive decisions starting to actually get executed on. So these could be early fundraising activities, big deals. It could be new product announcements. It could be shuffling of people, lots of changing of the guard when it comes down to the senior staff. But typically normally a quiet month in the news cycle, but obviously a lot happening underneath the surface. But we did see a couple really big deals in September, at least announced in September, that really caught our eye. And the first one was Sardine raising a bit over $50 million, led by Andreessen Horowitz. Kind of putting this money into Sardine, the Series B round here. Company hasn't been around for all that long, but obviously this is a company with a stacked management team up and down. And now they've just welcomed new and existing investors, including XYZ, Nika, Sound Ventures, Google Ventures, Eric Schmidt, Vikram Pandit, you name it. It seems like everybody that you kind of want into this thing got in. We also heard that this round probably happened earlier in the year. So, obviously it's a big round near, $51.5 million, but we do think this one happened actually probably closer to February or March timeframe. So earlier in the year. So, if you're trying to kind of benchmark comps on this particular round, probably they probably got some those old numbers, right? Those old revenue multiplier numbers, kind of that 40, 50x type of situation. But really exciting to kind of see what Sardine's been able to do here. And also, we think that they're going to take this money and put it to really good use. Sardine is one of those companies that really has taken kind of a bottoms up approach to fraud, looking at kind of the transactional layer, as well as kind of looking at the identity itself. So look, we think that this money is going to go pretty far for Sardine. And we think that, this is one of those big companies that will become even bigger in the future. So really excited about Sardine. And the other big one that we were looking at was Alloy, another $52 million coming up on the balance sheet, Series C, this time led by, the folks over at Lightspeed and our good friends over at Avenir Growth, with participation from folks like Canopy, Bessemer, and the others that were already in. I think this is a really good deal for the Alloy team. They didn't see a drop in valuation, still at over $1.5 billion. And people are still using Alloy more and more and more, right? So they're still seeing that pretty big growth rate. Unlike the Sardine raise, we do know this deal happened over the summer. So, this is really impressive from the team over at Alloy. And, they've been pretty public about what they're going to spend this money on, including kind of focusing on international expansion for fraud prevention tools. But, we think that these guys have a decent shot at doing more than just fraud prevention. We think that they could be doing more in the compliance bucket with the AML transaction monitoring and other product suites that companies that Alloy currently service are interested in and are currently being serviced by vendors outside of the Alloy platform. The other thing I think is really interesting about Alloy and worth taking note of, especially for folks like myself out there that are always keen to keep track of that product marketing trend. Bit of a rebrand. Don't know if it happened now or in recent time, but rebrand to a identity decisioning platform versus orchestration. So I really like the rebrand here, and I think gets us away from this kind of term that we've been using a lot over the last 2 years now, this orchestration term. And I like that we're now making it actionable, right? Decisions are being made, decision platform. So really like the rebranding here, and looking forward to kind of seeing what Alloy and Sardine do with this new capital.
Travis, question for you. Just, what do you, when you talk about the transition, calling it a decisioning platform rather than orchestration, a little more active now, do you think that's purely just product marketing language? Or do you think that there's also actually a real change in the product and how it's used by their clients?
Yeah, I think it is a change, right? I think it's a change that's beyond just product marketing. I think orchestration vendors are now more workflow managers, where I think decisioning platforms or decisioning vendors, you are hearing this split. This Alloy is not kind of coming up with the new naming nomenclature here, but where you see decisioning platforms really helping companies actually make decisions based off of the data that they're seeing. And this could be based off of networked data, right? So you can say like, okay, this similar type of consumer or customer coming through the platform is going to, go, have a better pass rate if they do these 5 things. And we're going to promote these 5 things during the onboarding process. That's a decision that's being made, not just a workflow manager. So I do think it is a bit of a difference there. And I think companies with massive scale and lots of customers that are seeing many transactions have a right to perform decisioning versus companies that might just be putting together a vendor platform to allow a workflow manager to be created, more of an orchestration approach.
Interesting.
Yeah.
I mean, that's a helpful explanation. And do you think that there's a actually I think that's the first time I heard the phrase "right to perform"? Is that a Travis original, or is that something you pick up elsewhere? I mean,
it might be a Travis original. I don't know. We talk about the right to win all the time, but it's not really about winning. We're talking about, can you actually perform these actions that you're claiming that you can do? So I think it may be a term that we need to start using more often.
Yeah, no, it's a good distinction. I liked it.
Yeah. Well, kind of moving along, because obviously this is some big bucks here. And like I mentioned, we're going to see a lot more of it. But, I'll turn it over to you, talking about kind of what we're seeing with the market, specifically around the venture capital market.
Yeah, I think, it's interesting, thinking back to our comments kind of at the beginning, we talked about, kind of getting back to work, maybe some different perspectives here. You commenting on how busy everything's been. I know Liminal on the strategy consultant side, it's been a big year for you guys, very active, but there's definitely been a slowdown in VC land. And I think, it's it's always easier to pass along anecdata than to actually get something that's like truly quantifies where we kind of are in the market, given the nature of private markets and just how there's just not as much disclosure. So this piece caught my eye, and it's by John Sakota, and who's a venture capitalist at a firm called Decibel, and Kate Clark in the information. And they tried to quantify where the market sits as far as accumulated dry powder. And dry powder is really a reference to the committed but uncalled capital that VCs have in their funds. So these are funds that are yet to be deployed or invested. And their point in their analysis shows that we are at record levels of dry powder. Some of that is, now that's largely a reflection of the fact that for the last decades, so much return was available in private markets and venture capital markets, that as crazy and bonkers as the market was going in startup fundraising land, of course, that means that the VC funds themselves are also raising money at a record pace. And so now we've had a slowdown. We've had a slowdown in the deployment phase of capital, but VCs are sitting on record amounts of capital. And so what this suggests is that at some point the dam's going to break, and there is going to be this sort of market reset, and we're going to see this money put to work, and we're going to see valuations reset. I know at the beginning of today, you talked about a company that we think raised at kind of that 40 to 50 times ARR multiple. At the time, you had probably, when that deal was completed, you probably still had companies like Okta trading over 20 times sales. So, getting a multiple of twice that in the private markets, not totally unexpected. But now we see that Okta's back sort of in that mid to high single digit range. And so what's that going to suggest for valuations? And so ultimately, will we finally get that reset between buyer and seller of startup equity, where startups are going to need to raise capital, and they're finally going to come to the table and sort of be forced to accept that the market is where the market is, and we'll finally start to see some transactions clear. And it'll be interesting to see where that reset is. I think in identity land, there's still a whole bunch of trends that augur well for the industry. We've seen cybersecurity, data privacy, security. These themes have continued to resonate. They've seen some investment. We talked about Alloy. Alloy obviously raised over the summer. So this is still a strong market that we know is attractive, but has attractive underlying fundamentals, but at what price? And I think in the next probably, fourth quarter, and certainly I think the beginning of the new year, I think we're going to see a lot of deal activity, and we finally will get that shakeout that we've been talking about for a while.
Yeah, it makes a lot of sense. And, from your perspective as an investor, do you see this as a threat to maybe kind of other investors in the space, or do you see this as, who should be threatened from this dry powder market correction scenario?
I mean, it's a delicate, on some level, it's a delicate dance, right? Because it will also see, so we've seen a slowing already because of market fundamentals in the public markets. And so now what remains to be seen is the venture capitalists that are most comfortable with their ability to raise their next fund are going to be the investors who are going to be the most aggressive. So I think what we're going to see is amplification of the sort function in the market, where the best investors with the best track records are going to be able to go out and invest very aggressively over the next year and a half, because they're going to know that they can raise another fund. And investors who aren't as certain are probably going to be much slower to deploy their capital. At least that's what I would expect. And so I think when you look at ultimately, technology investing is disinflationary, right? We're figuring out how to create more things, make goods and services more abundant at cheaper prices. That's fundamentally what technology innovation does. So as kind of rates top out and we worry about inflation, there's still going to be incredible incentives to invest. And it's just going to be who kind of gets to sit at the table and kind of make some of those decisions. And so that's kind of how I see things going.
Yeah, makes a lot of sense. And, I think for, as a strategist, looking at this and thinking, hey, there is going to be more money, right? That's a truth here. There's going to be more money coming into the space. It's going to be smarter money, right? Yep. I think a lot of people have gotten a lot smarter on this market. And it might mean that, that new product expansion, or that new product idea, or that new market expansion that, a company is counting on for growth might not get the funds that it needs, but they will get the funds to stay with their core product and in their core market. And they need to prepare for slower growth, but they still will have a chance to continue to survive and to win.
Yeah, I mean, I think so we have an increased cost of capital, right? So just the hurdle rate on investments now higher. And so I think investors, particularly in the last 6 months to even a year, we've seen more and more people talking about things like, the efficiency scores in SaaS, or what your burn multiple is and things like that. And so I think it's more and more incumbent on startups right now, specifically, to make sure that they're it's no longer just growth at all costs. It's now efficient growth is the new mantra. And so I think you've really got to be able to prove and quantify things versus just having a pure theory for why something is a good idea, right? And so I think I think we've probably seen some, you can point to a few different markets where we, instant delivery services or rapid delivery services where we've kind of had this race to the bottom, of like how tight can we get that delivery window? Was it really worth the money? I don't know. Whereas now you're actually going to have to, companies I think are going to scale when they've already proven out that they're capital efficient before it's just a big market or there's a lot of demand there, if that makes sense.
It makes a lot of sense. So no, very interesting. And I think we should definitely keep our eyes on this, but expect to see some of this market correction coming into play here over the next few months. No, thank you for that, Dave. So I'm going to move us forward here to, what to look forward to at Liminal coming up here. So this is really for our members. We have a lot coming out with our member content. We have our Q3 quarterly briefings, as well as our updated Q3 market trends reports. These are obviously our two kind of big look backs on the quarter. So stay tuned for those. I think we have some really interesting insights in this market right now, as well as our updated outside in report on SIAM. So one that obviously our members, you guys have been asking for us to dig into for some time. So here we are. We'll definitely be adding the SIAM outside in report to your research repository shortly. And with that, Dave, want to just thank you for your time and really excited for this past September and looking forward to a very interesting and exciting Q4.
Absolutely.
Great. Thank you.